Today I'm going to walk you through exactly what you need to do to start investing in tax liens. This is your tax lien how-to guide. Now, first off, before we get started, my name is Casey Dimon. I've been investing in tax liens and tax deeds for well over 2 decades now, and I've been training others just like you for more than a dozen years through my videos, my books, and the comprehensive tax sale academy that I operate. So, you've heard about these things called tax liens, and you want to start investing in them. First off, let's talk about tax liens. What exactly are they? For some, this information might be completely new. For others, it'll simply be a review for the next couple of minutes. So, a tax lien is considered a priority lien against a parcel of real estate for the failure of that property owner to timely pay their real estate taxes. What this means in layman's terms is that the property has a tax bill that went unpaid. The county needs that tax revenue for things like roads, schools, police, fire, rescue, parks, bridges, and all sorts of other stuff that we use on a near daily basis. Now, if enough of those tax bills go unpaid, the county will end up in a pretty bad situation. If there's no tax money, it means there's no money to maintain the roads, to have schools, to operate any of the stuff that I just mentioned. Pretty bad spot for the county, right? So they can't just let these bills go unpaid. There's a few different tax foreclosure systems that we use in this country for these delinquent tax bills. And in about half of the states, they sell something called tax liens. So in this situation, the property owner failed to pay the property taxes on time. The county will then sell a tax lien against the property. This is where an investor will buy that tax lien by essentially paying the taxes on behalf of that property owner. The property owner then will have the ability to come in and redeem or cancel that lien by going to the county, paying off those back due taxes plus the interest that is due to the investor. That is how you make your money most of the time. So as the investor, you will get your money back plus interest, and this happens about 90 to 95% of the time. Now, they have this redemption window where they can come back, pay off those back due taxes and interest, and then they cancel the lien, they get the property back. No big deal, right? Everybody moves on. But if they do not redeem that property within that redemption window, usually around a couple of years, if they fail to pay off the back due taxes plus the interest that is due, then you as the tax lien investor, the tax lien holder, can go in, you can foreclose your tax lien, and you'll become the owner of the property. So you're typically going to get a nice interest rate return, but it's going to be backed by the underlying asset, which is the real estate. So you have this tax lien that's backed by the real estate that it is attached to. Now, where do you find tax liens? Let's say, Case, that sounds great. I want to buy tax liens. Where do I even find these things? Typically, it's going to be through your county tax collector or your county treasurer. And in many places, they'll be sold at a specific time every single year, usually shortly after the taxes were due, because again, the county needs that tax revenue. The best suggestion that I have is to search Google for tax liens in the name of your county and then the state. So tax liens in Miami-Dade, Florida, for example. You can also review the state guide that I've produced for you that's completely free that I've linked below this video and in the podcast notes, as well as the resources inside the Tax Sale Academy for our Academy members where we have direct links to tax lien list. Now, there are a few things to know about tax liens that are extremely important. Now, this is not an automatic you will always make money type scenario, no matter how much you or the experts out there want you to believe. In fact, you could easily lose money or make such a low return that your money is better parked in a savings account. There are a few different types of systems that exist when it comes to selling tax liens. One of those systems is called a bid down system. And in this type of system, the interest rate will start at the maximum allowable interest rate as set by law in that state. Might be 18, 20%. And then it's bid down to whomever will accept the lowest rate in exchange for buying that tax lien. So it could be bid down from 20% to maybe the person will accept 15%. And you'll say you'll accept 12%. And if nobody bids lower than that, then you'll get that lien at 12%. So it's just a way to make this process a competitive bidding process. Another system is called an overbid system, where the interest rate might actually be set in stone by state law. Maybe it's 12, 15, 18, 20%. But you actually pay more for the lien than the taxes that are owed. So you might have a $1,000 lien that actually costs you $1,200. So whoever pays the most amount of money for the right to purchase that lien will be able to buy that lien. But what you have to consider is that when you add on the overbid here, that effectively reduces your interest rate of return relative to the amount of the overbid. And there's situations where you might have a $1,000 lien, and if you were to pay $5,000 for it, you're not going to make up that difference when it comes to a 15 or 20% interest rate, no matter how hard you try. So that'd be a situation where you're losing money. Now, I've got videos on all this, but you must research the state that you're going to be investing in to make sure you completely understand what you're doing and how their specific process works. Now, in addition to researching the laws, what else should you research? Well, the underlying asset for that lien. The tool that protects your investment is going to be the real estate that the lien is attached to. While it is true that you will most likely make your money back, plus interest, when it is paid off by the delinquent landowner, you still need to account for the fact that if they fail to pay you back during that redemption window, the only way to get your money back is to foreclose on that property and then resell the property. So if you were to buy a lien for $5,000, say, and the owner fails to redeem that property inside the redemption window, the only way to get that $5,000 back is to foreclose on that property. But what if that property is only worth $1,000? That means it would have been a massive waste of time and money. Typically, a tax lien's face value, what you pay for that tax lien, is just going to be a fraction of what the property is worth, but it's crucial to spend a little bit of time researching that property just to make sure. Situations like a burned down or demolished house can occur. Contaminated properties happen. Unbuildable land is common, and all sorts of other issues. So, by this point, you've found the list, you've researched the liens, and now it is time to buy. While some counties do still sell their tax liens through an in-person setting, often at a courthouse, often in jury assembly rooms, many counties have actually transitioned to online tax lien sales. Now, the county that you are investing in can direct you to the specific setting and how they operate when it comes to selling their tax liens. But usually, you'll be required to register, oftentimes put up a deposit of some sort, and then it's just a matter of bidding on the liens you want to purchase. And a few days later, those liens will be in your name in the county records. Now, as far as strategies go, there are a few different paths that you can take once you own the lien. You can resell that tax lien on a secondary market if you want to. Now, there isn't a true tax lien marketplace that I have found that I trust and that has been around for a long time, but you can resell them using more creative methods like mailing list, forums, that kind of thing. There's actually people in the Tax Law Academy that maintain email list for people that are interested in buying tax liens through them opposed to directly through the county, simply because they don't want to have to go through the whole process of registering with the county and being there to bid on these properties. So they'll buy the tax liens at the county, send them out to their email list, resell the tax liens, make a few bucks, and move on. Now, oftentimes, it's not going to be as much money as you'd make if those tax liens were to mature or if you were to foreclose on those liens, but it's a good way to make a few bucks very quickly if you're able to strategize creatively. The next option is the most common, and that's just to do nothing. The large majority of liens are going to be redeemed during the redemption period. This is usually good news if you've entered the investment correctly, because you're going to get your money back plus a return that's going to beat most markets. And of course, that lien has always been backed by the safe and secure asset, which is real estate. Now, when that happens, when a lien is redeemed, you'll either receive a check in the mail or they'll credit your account. Very simple. You transfer it or deposit it, and boom, that investment is over. You're on to the next one. You've succeeded. Super easy. The last way to profit occurs only 5 to 10% of the time. And that is when a tax lien goes through that redemption period, but the owner does not redeem it on time. When this happens, you must foreclose on that lien in order to get your money back. This can be pretty simple in some states. It can also be rather complicated in other states, depending on where you are investing. Now, once you foreclose on the property, once you've gone through the tax lien foreclosure process, you are now the owner of that property. And this would be considered a home run in tax lien investing. Of course, it would also require more money since you have to actually foreclose that tax lien with an attorney oftentimes. Requires more work, more marketing, and you have to go through the whole selling process in order to realize your return. As a side note, I actually have a member in the Tax Sale Academy, AJ, who nailed a tax lien investment by profiting $25,000 off of a $13,500 lien that went unredeemed. He foreclosed it and then resold it. Again, that's not overly common, but it does happen. The good news about tax liens, they're plentiful. They're backed by real estate. They can be extremely profitable once you understand this business. That's all I've got for today. I truly hope this has helped you out. If you enjoyed this podcast episode or any of the episodes here on the Tax Sale Podcast, please do me a huge favor and leave some positive feedback on whatever podcasting or video platform you're listening on. Of course, we don't charge for these podcast episodes or anything like that, but your feedback really does help us out and might even serve to pay it forward to somebody who learns about this incredible business simply because you took the time to leave a positive feedback comment, click a thumbs up, or leave a 5-star review. And as always, if we can be of any additional help, literally everything I know about the tax sale business is taught through TaxSaleAcademy.com. Hey, take care, folks, and make it a successful day. We'll see you next time right here on the Tax Sale Podcast. Bye-bye.